Well, howdy there, folks, and welcome into today's video. Hope you guys are doing great out there as always. Here today, we get into my top 5 stocks out there, okay? And today, I'm going to do a little bit of a video that I love to do from time to time, where not only are we going to get into stocks, okay, and we're going to talk about, very specific stocks in this video, but we're going to get into why these stocks have worked out so well, okay? And so it's going to be a little bit of a lesson combined with stock talk, and that's actually my favorite videos to make. Sometimes I make just straight educational videos. Sometimes I make just straight stock videos, right? But my favorite actually to make on the YouTube channels is when we can talk about individual stocks, but talk about them in kind of a learning manner, and that's going to be what this video is. So hope you guys get a lot of gems out of this one. Hope you get a lot of value out of this one, and so you can identify the next stocks that you think are potentially the next big winners. And by the way, some of these stocks mentioned in today's video could still be the next big winners, which is kind of important to kind of keep in mind there. So hope you guys enjoy this as always. All I ask in return is that you smash that thumbs up button. That is literally it, guys. Appreciate that in a huge way. If you want to know where I'm getting 75% plus of my stock picks now, check out the video I have linked below. It's going to be as a pinned comment down there. If you want to look into my private stock group, the private Discord chat, anything like that, check out the first pinned comment down there. Alrighty, guys, let's get into this. So first off, something I wanted to address real quick here before we actually get into this is how would you impress me as like a stock picker? Like, what would it take to impress me? I would judge somebody like this. 3 main things, would tell me somebody's really good at what they do, right? When it comes to investing in stocks, right? 1, you got to destroy the market. You can't be getting beat by the S&P 500. If you're getting beat by the S&P 500, you can't call yourself a great investor, right? That's just not the way it works, right? You got to be able to not just beat the market, but destroy the market. Meaning, essentially, if the S&P 500 goes up 10%, your account better be going up 15%, 20%, maybe even more than that, right? You want to really obliterate that market. And that's what I go for each year. If the market on average goes up 8%, I want to be getting 20%, 30%, 40%. My personal goal each year is 30 to 40%. Some years I do way better than that. Some years I underperform that mark, but that's my goal overall. And I'm not putting in all this work, doing all this research work, worrying about, these different stocks just to do however well the stock market does. Like if I'm just doing the same as the market, I might as well just put my money in an index fund at that time. Okay. So you got to be able to destroy the market. You got to have a 90% plus win ratio, in my opinion, especially as a long-term investor, right? If you're getting, more than 10% of your stocks wrong, on a long-term basis, right? Anything can happen short-term over the first few months of that investment, the first 6 months, even 12 months of that investment, right? But by the time you start hitting year 2, 3, 4, 5, if that stock hasn't worked out, that's a loss in the end, right? It's not a, you got in it at way the wrong time. You probably paid a really bad valuation for it, or it's just a bad company you got in at the end of the day. If you're multi-years out all of a sudden and it still hasn't worked out and you're down on that. So that's how I judge things. Like you got to have a 90% plus win ratio, and you got to have many different stocks that are triple digit gainers, right? Home runs, grand slams, I call them, right? If you don't have that, then you got to ask yourself, if you're just a one-trick pony. If all you have is one stock that's done really well, right? And especially if you've been doing this for years, it's like, where's the rest of them, right? And so, that's kind of what I judge a great picker to be. You got to destroy the market. You got to have a 90% plus win ratio, and you got to have several different stocks up 100% plus, okay? And so let's get in these top 5 stocks that have worked out tremendously well and what has gone right with these, okay? ELF. So this is my 5th best stock as a percent gainer, right? 281%. Been fortunate to have so many triple-digit gainers now. I can't keep track of them all. And ELF is one of those. It's our 5th best performer. 281% gain on this one. What has gone right with ELF? Well, the first thing in regards to ELF is when I got in the stock, it was a beaten down dog stock, okay? It was left for dead and forgotten, okay? They put it in the grave. Wall Street put this one in the grave. No one cared about it anymore. I remember when this company went public, there was a lot of excitement around them. They were doing bigger and bigger deals with Target, and it was a building brand, and then a lot of folks were excited about this one, okay? And then the stock kind of peaked out. And after that, it seemed like the business was just kind of going down. And what happened also, the stock price just seemed to go down and down and down, okay? And it was done. They were forgotten about. It was a $7 stock, okay? And I looked at this company and I saw a beaten down dog, right, with an extremely low valuation, like insanely low valuation. And what I saw was a company that was actually building back their brand really strong. And I saw a lot of YouTubers and influencers start to talk about their products, including, the biggest at that time in the makeup industry was this YouTuber called Jeffree Star. And this Jeffree Star was doing reviews on these e.l.f. products. And these videos were getting, I'm talking 5 million, 10 million plus views for these e.l.f. reviews, okay? And so I'm looking at this and I'm like, the most popular makeup YouTuber at that time is doing very positive reviews on e.l.f. products. And I watched what was going on in other platforms as well, and kind of the hype building around this e.l.f. company. And then other smaller makeup YouTubers were also reviewing them with everybody had a lot of positive things to say because e.l.f. was making very good quality products for very cheap prices, okay? And so I looked at this one and I said, this is a tremendous opportunity. And I took that opportunity and I bought a lot of shares. This is all I hold it now. I only hold 1,000 shares. I think at the peak I held, I believe it was over, I think over 10,000 shares at the peak. I can't quite remember the specific number. And I took a lot of profits in the stock over time, right? Because I kind of felt like, a lot of the gains had already happened for the stock. However, I still hold this 1,000 shares. And the reason I still hold this 1,000 shares in this one is because at the end of the day, they got a very good management team. They got a brand that's very, very strong. And so the way I kind of think about this one, just in case this one becomes the next, huge makeup brand, I don't want to miss out on that, right? And so that's why I keep my 1,000 shares to this day, is because of that, right? Obviously, the valuation's at a very different place than when I invest in that company. And the business, to be quite frank, is at a very different place than when I first started investing in it. It was a lot riskier of a stock when I first started investing in it. But I can tell you when the valuation was pushed down as low as it was pushed, it wasn't nearly as risky as you might think, right? Is one thing if you're getting a stock that has a super high valuation, right? Then you're talking about a higher elevated levels of risk, right? But when you're talking about an insanely low valuation like this one had on it, I was setting myself up for a position to thrive, right? There was a very low probability, especially with all the attention e.l.f. was getting and positive attention at that, right? The free publicity was off the charts. It just felt like something that was going to work out very, very well. And fortunate it did. And valuation matters, man. I know a lot of times, folks think, valuation doesn't matter. Valuation does matter in the end. And it's all about when you get in a stock, right? We could all pay, I could pay $10 trillion for Amazon today. Let's say Amazon was trading at $10 trillion. Amazon stock's a ripoff at $10 trillion. Let's say Amazon's trading at $1 trillion market cap. Amazon's a deal and a half, in my opinion, at a $1 trillion market cap, right? It's all about what you pay for an asset. And if you pay the right price, you can make out really good. If you pay a really bad price and you don't know how to value companies, you can end up in some not just deep trouble, but you can end up underperforming in the market. And that's kind of the trouble there, okay? So e.l.f., yes, that's our 5th best stock. 4th top stock of all these stocks is Upwork. So when it comes to Upwork here, this one has obviously worked out tremendously well. If you don't know them, they're huge in the freelancing economy, okay? And this is a stock I picked up actually last year in 2020, okay? Look at the cost basis on this one. $13.43 there. And then I also have some shares here in this account, $12.28, okay? When it comes to Upwork, what I saw here was a company that was on the frontier of the freelancing economy, which is something that I think in 2020, it was so misguided that these stocks saw such big drops. Upwork, a Fiverr saw a big drop as well, right? But I looked at Upwork, there's a stock at $11, $12, $13 a share. It was beyond silly because you think about it, right? What did the Rona cause? The Rona, right, caused everybody to all of a sudden work from home, right? And companies and businesses around the world started to realize, wow, I can have workers work remotely. I don't need them in an office environment. And if I don't need somebody to be here every day, right, and them treated as an employee, maybe there's certain tasks and jobs that I can outsource. And where do you go to outsource work if you're looking for, a lot of independent contractors and whatnot? Usually where most businesses will go, one of two websites. They will go to Upwork or they will go to Fiverr, okay? And It really depends on if you're a small business, mid-sized business, or a large company, right? Large companies might go a little more to Upwork. Mid-size, it's kind of in between Fiverr and Upwork, right? And a lot of small businesses maybe prefer Fiverr a little bit more to Upwork, right? But it really depends company by company. But needless to say, like, this was just a tremendous opportunity. It's another one of those beaten down dog situations, right? Kind of like a Elf, right? Where the valuation got disgustingly low. I mean, this stock trading at 12 was just laughable. The market cap, how far it got pushed down, was just laughable. And I'm looking at this and I'm like, this is a multi-decade thing going on. Freelancing economy. Upwork's the biggest player in that market. Come on, man. And so it was a kind of a perfect storm, like an Elf, where the stock was beaten down and it had a good management team in place, right? And it was just a great business model at the right time, right? And so obviously we took advantage of that. And Upwork's a company that, as far as the underlying business, I think the underlying business is going to thrive for, as far as I can see. Like, I don't know when the day is Upwork stops growing. Someday Upwork business will stop growing, right? I don't know when that is, honestly. And I don't think it's going to be anytime soon, because I believe there's going to continue. There's going to be more and more companies and businesses that use companies like Upwork, right? And so that's why I continue to hold this stock, and I have no interest in selling this stock, despite being up well over 300% on the stock. Because at the end of the day, when does Upwork stop growing? Like, seriously, when do they stop growing? I don't know, man. It's so far into the future that I can't even see it, right? So yeah, that's why I continue to hold Upwork. I think the business model is a very sticky business model and an extremely profitable business model if you're looking on a long-term basis, okay? So that is Upwork, the fourth of my top stocks here, okay? Let's get into the third one of the bunch, and it is the Planet, okay? Now, so the Planet, this is our original shares. We bought in this one, $1.25 cost basis. And I bought this one consistently, you know, even at $2, $3. I think I even bought this stock in other accounts as much as like $5, right? This is just the initial ones I got up 446%. But I think I'm up to, I don't know, I might be up to, let me see, 50 or 60,000 shares, maybe even more than that when it comes to Planet, okay? So the Planet, extremely similar situation with Elf and Upwork. You're going to see a very consistent trend, okay? What I saw with the Planet is a business model I loved, right? We're talking about creating these stores that are a Disneyland-like experience for the MJ space, right? Jack Jackson, right? We're talking about this stock was so beaten down. When I started buying this stock, it's $1 and something a share. Like, you know, you're talking about these are type of businesses that are so like beaten down. They're just like they put them in the casket and just throwing dirt on them, man. And that's the way a lot of these business models go. And I look for these type of opportunities. But the thing I love to look for is a business model that I can see thriving. And what I saw with the Planet is, I'm like, these stores, as soon as they can open back up and start doing business again, people are going to flock to these stores. And the way I looked at the Jack Jackson space, right? Federal legalization coming around the corner, in my opinion. And I looked at this business model, and as the stock continued to go up higher to $2 and $3, right? I looked at it and I said, now they're going to get to raise money, which they started raising money, right? Which now the company has, I believe, over 9 figures of cash on the balance sheet. 9 figures. This was a stock I started buying when it was $1 a share, and now we're talking about a company that has 9 figures plus of cash. Never mind the cash flows that are starting to pour in from the Vegas store, which is doing crazy business. We have the Orange County store opening up next month, right? And as they get more and more stores open, right, and plus the Medicine stores open now, the cash flows will build and build, and they can start opening maybe 2 superstores a year, then 3 superstores a year, right? You see where we're going with this, right? As well as expand their own brands. And so I looked at a stock like the Planet, and by the way, this one I think is still a tremendous opportunity. Let me be quite clear. I mean, it's a $1-something billion market cap. It's a company I think long-term is going to be a $10 billion plus company. And when I started buying in it, it was, I don't know, I think it was $100 million or $200 million market cap or something laughable. It was ridiculous, right? And so very, very consistent trends you're seeing in all 3 of these so far. You saw it with Elf, you saw it with Upwork, you saw it with Planet. All ones that are up 200, 300, 400% plus since I started buying, right? And all of them have the same exact blueprint. Super beaten down stock, good management team, and a company that is one of those that has the underlying business is one that's going to thrive in the future, right? If you get into a beaten down dog stock that doesn't have a great business model underlying, your gains are going to be limited if you get any gains in that stock, right? But when you look at a company like Elf, this was a brand that was expanding, right? When you look at something like Upwork, come on, man. You think the freelancing economy is not going to grow? Like, come on. Like that's just like, let's be real, right? And when you look at this company and you go to their store and you're wow, and you're like, this is not your around the corner Jack Jackson store. Let's just put it that way. This is an unbelievable experience. And you see the way they're building out their brand so high end. You can't be anything but thrilled with those type of opportunities, right? And so another one that's been just worked out tremendous for us, okay? Third best stock up there. Let's get to the second top stock here of the bunch, and that is Revolve, RVLV, okay? Revolve. So as far as this one, up 468% in this account, up 480% in that account there, right? And when it came to this one, right, the cost base is 1162 here, cost base 1186 here. When it came to Revolve, here's what I saw. Beaten down dog again, okay? Beaten down dog stock with a beautiful underlying business model, okay? The same exact trend. Like Revolve was silly. It was getting beaten down so bad. $11 a share? Are you kidding me for Revolve? And I looked at this business model and I said, okay, they have a management team that's done nothing but an amazing job of building this business, right? Yes, they are hurt by a once in 100-year health event, but eventually that health event will be over and people will go to buy clothes again, which is what this business is focused on, with an average selling price of, or an average ticket usually of this company is in the high 200s, sometimes low 300s, right? And so I looked at this company, the valuation was beaten down to nothing. It's a business model that was absolutely going to thrive, no question, once the economy started opening back up and people started caring. Because you think about it, like you close the economy, okay? What happens? No one buys clothes for the most part, right? Like if you can't go anywhere, you can't do anything, you can't go to that wedding, you can't go to that special event, you can't go to that party, you can't go to blah blah blah. You're not going to be as incentivized to buy clothes, right? You can't go to that concert or that sporting event, right? And so there's going to be a huge drought for clothing buying. But as soon as things open back up again, there's going to be a huge pent-up demand. And so that's what my play was on Revolve. It's like, great company, great underlying business, great management team, and they're going to be in a spot to thrive in 2021, 2022 as the economy opens back up and people get back to living life again, right? Which is great for clothing sales and great for a company like Revolve. And by the way, think about this for a moment, right? People in 2020 got more used to shopping online than ever before, by far and away in history, right? Because a lot of retail stores were closed. So all of a sudden, if you want to do some shopping, you go online and do that shopping, right? And who thrives more than anybody else in the clothing space when it comes to that? A company like Revolve, right? And so you look at this, and it's another consistent trend with the other stocks. Beaten down dog with a business model that, when is the day that Revolve stops growing their revenues? I literally have no clue, because it's so far into the future that I can't even see it, right? Unless everybody stops buying clothes online, which is not a trend. That's just a trend that's continued to play out more and more, right? 10 years ago, it was people couldn't even really fathom, for the most part, buying clothes online. Now, it's starting to become commonplace. And Revolve's set up to be one of the companies that thrives the most from that trend. And that trend isn't ending anytime soon. It's just getting bigger and bigger, right? And so a company like Revolve will thrive in this environment, right? And so that's another reason why I'm not selling Revolve. I don't like to sell a company if the management team I feel is a great management team and the company is at a place where I don't know when they stop growing. In RVLV, I literally don't know when they stop growing. And if you look at the valuation of the company, although the stock's been pushed up a lot since when I got in, it's not like it's a crazy forward P, especially when you start running the numbers on where the growth is for this company long term, right? And so, yeah, it's been a tremendous stock for us. I think it will continue to be a tremendous stock. And I have no plans to sell that stock, because at the end of the day, I look at it and I'm just like, too big of an op there, too good of a management team. And they're in such a growing space, right? This is where you can find the right valuation with the management team in place, right? In a business that just, is going to grow and grow and grow. And you see these opportunities. And it wasn't like you just see these opportunities in 2020. You see these opportunities in other years as well. And you see some of these opportunities right now. There's a few stocks out there right now that I've been buying for the last several months, right? That I look at, and I feel like some of these stocks are beaten down dog stocks, right? And, we're going to see where their business models go over time, all right? So that's the second one. Let's get into number one here. I think some of you guys that follow my channels a lot will know this stock, okay? It is good old Tesla Tesla, okay? So what has happened with Tesla Tesla? Well, it's been a 1,341% gainer for us, right? Cost basis 45.51 on this one, right? On a split adjusted basis. And when it came to Tesla, same exact situation as all these other stocks. Tesla was a beaten down dog. This stock didn't do anything for like 6 years, man. 5-6 years, right? So a lot of the shares I bought in the stock were in 2019. I looked at the stock. It hadn't done anything in years. I looked at the business model, just continue to go up. I looked at this business model and I said, Elon Musk is building a beast for the future. He's building a business model here that is set up to thrive for the next decade, if not decades, when it came to electric vehicles. And so I saw trends, EVs, the wave of the future, right? Autonomous driving, the wave of the future. And I said, okay, who's in the front for EVs? Tesla. Okay, who's in front for real world application autonomous driving? Tesla, right? I mean, you know, who else even has this technology? Like, I can't go into any other car right now in the real world, and especially not in 2019, and experience the same type of experience I experienced in a Tesla, right? So I'm looking at this, I'm like, they're in the forefront of EVs, in the forefront of autonomous driving. And I'm like, these are two trends that are huge. And then you get the energy business in front of that, right? You get Elon Musk leading that company, right? Who had built successful businesses outside of just Tesla, right? Which is an amazing thing. And so you look at all these sorts of things, right? And it was all leading to a place where this stock was set up to be a B stock. And it honestly has been even more of a B stock than I thought it was going to be, okay? I thought, oh, you know, maybe we make 1,000% on this stock over the next 10 years. Little did I know we get 1,000% plus gain in the next 2 years, essentially, okay? So it's even taken me by surprise how much the stock has done. But as far as the business, it's just a beautiful business model. And if you're wondering, like, you know, even though I think this stock could potentially kind of stagnate for a while, right? And just kind of, it's in the 400s, so that 500, so that's 600, but it's just kind of floundering. Why do I not sell it? At the end of the day, when it comes to Tesla, I don't want to try to time out this stock, right? Let's say I sell it at 656, right? And then it goes down to 456. Do I buy back in at 456, or do I wait and say, well, maybe it'll go a little lower, right? And then you start getting greedy around pricing. It's just not worth playing that game because it starts putting you into a trader mindset. And being in a trader mindset is not the type of mindset any investor should really want to be in when you're an investor, right? Investing's gotten me a long way in this whole game, right? And I don't want to mess up my mindset because I'm trying to time things in and out. And especially in companies I love, with management teams I love, and products and services I love, like, come on, man. That's just not worth it in the end. So, yeah, you can see some trends. You got to find the beaten down dogs that have the management teams in place, right? And have the business models that are set up to thrive. That's if you want to get some huge gains. If you want to make, you know, decent gains in the market, you can get into even some stocks that are performing well, right? You know, it's hard. Amazon, you know, Amazon's certainly not a beaten down dog, but if you bought Amazon stock for the next 5 years, I don't think you're going to get these sorts of gains, you know, 400%, 1,000%, 300%. But I think you would still do pretty good and probably even outperform the market. But you're not going to get these sort of gains, right? You got to find the right situations where it's a beaten down dog and the business model beautiful with a beautiful management team there in place. Okay, guys? So hope you enjoyed this as always. Hope you got some good gems out of it. If you want to know where I get 75% plus my stock picks, check out the pinned comment down there. Don't forget to smash before you leave. Much love as always, guys, and have a great